Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast.
After this, we'll be at 300. So,
All
and
right.
we're pushing it in our email that's going out at 2 p.m. Eastern today. So we will have a big crowd tomorrow. Do you need me to work with you on a PowerPoint, or is that what we're talking about at noon? Or at 3 o'clock?
I'll just have you come on for like 10 minutes just for the logistics, and then we're finalizing the PowerPoint, the questions.
Yeah, I'll have. I need their email addresses if you can. The speakers, so I can send them the speaker invites right away. So. John Riasti, you were on mute, but it seems like your mic has been activated.
All right, am I muted now?
There you go. How you doing, John? We hear you fine.
Doing good. Can you hear me good?
Yeah, we can hear you fine.
Okay, good. Good. I have to. This is the. I had to get a new computer, so this is the first time. I should have set this up everything before, but
it sounds.
This is the first time I've used this. Do I look good? Is that?
Sounds good. Looks good. Okay. Everything seems to be upgraded. So, what type of computer?
A blinking light above you, is that a fan?
Okay, thanks.
Hey, Michael, can you fix my mini cam in 60 seconds? Can you fix my mini cam in 60 seconds?
Thanks. How are you?
Yeah, I have everything going. I just can't figure out how to. I did. I paid for it twice now. Hey, John.
Hey, Bob.
Hey, Bob.
Hey, guys.
Lance, did you ever get my present?
Oh, it's heavy to pick up, guys. Thank you, Bob.
How do you like it?
Oh, I think it's great. Joe.
Yeah.
Can you do me a favor and send me the closer class? I got to start updating it to meet Bob's new beautiful hardcover book that he sent me.
You need the PowerPoints? I can do that right away.
I need the PowerPoints from all the closer classes.
And then, do you have any word on the new SOP 5057? Yeah, we're still waiting.
That's a first when they announce it and don't even release it. So it's released. It's
the stealth.
So Bob, yeah. Bob,
yeah.
hardcover. I like it a lot versus the softer cover. And also, Bob, I want to comment, I don't think you did this on purpose for me, but the large print is really nice.
Courtesy of SBA.
Yeah, I'm afraid, Bob, to take my highlighter and my pen to it yet.
I got plenty more, so go for it.
So, John, is the commercial real estate market going to fall in the crapper? No.
Well, everybody says that. I was just, for what this is worth, one of the women on Shark Tank, Barbara, I can't remember her last name. Did you see that?
I did not. Oh.
I know you're talking about, yeah.
She said everybody would be worried about it.
John Winnick, what do you think?
Well, I mean, I think the banks aren't particularly worried about it yet, but if you read the Wall Street Journal the sky's falling. So
Yeah.
I think there's a range of opinions. I mean, there is a 2008 like viewpoint, and I don't think it's totally out of the question or irrational. I don't necessarily share that, but I think what you'll see is a pretty dramatic increase in problem loans, but
Yeah.
you're going to see that because they're at a record low level. So, if the sky is not falling if banks go from 40 basis points in NPAs to 1.25. But that may seem, alarming to people in the banking industry, but from a growth standpoint, or from a historical, that's not too dramatic.
Yeah.
All right, guys.
So
We're recording.
Hang on. Yeah, I don't know. How's that? Any better?
Yeah.
Yeah, it looks good, Bob.
All right, let's rock and roll.
All right, gentlemen, let's have a good show. In 3, 2.
The broadcast is now starting. All attendees are in listen-only mode.
Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. John Rialsi's in the house. John, good to see you. It's been a couple of weeks.
Good to see you, Lane.
Love to know what you're reporting on. John Winning has a great webinar tomorrow on what's going on in banking crisis, which has been solved supposedly. We'll get his feedback, and of course, Lance, where's the new SOP?
Bob, I have no. Well, Bob, guys, you all need a hardcover copy of the 50-10-7, guys. I'm having so much fun with this edition. Bob. Thank you so much. Please get you one. The SOP 50-57-2, kind of an interesting release from SBA. They blast out a news report stating that it's done. It's going to be available. It's effective August the 1st. Here are some of the changes, but yet we are yet to get a copy of it, which we're all anxiously anticipating. And the one thing, Bob, I'm so excited about is the universal purchase package.
There you go. No more purchase to main kit. Hey, we have a quick poll question. Where are you starting to see issues? And this is courtesy of John Winnick. John, why do you want us to pick one?
Well, I was hoping we could pick multiple ones, but that's
well.
Hey, John, I'm going to go with construction.
There you go. Well, that would be. Any surprises there, John?
No, I mean, I think, I would have expected C&I to be a little higher given the audience here, but generally that sounds, I'm surprised no one said senior housing because that's kind of number 2 as far as what we're hearing from banks, but after all.
Okay. Is it really? Wow.
Yeah, I mean, there was.
Sorry. Go ahead, John.
No, I mean, there's definitely some challenges in the senior housing space from, obviously COVID shrank the population of people in nursing homes, unfortunately. Obviously, a lot of bad PR and expenses in all senior housing have risen pretty dramatically, as almost nobody can operate a senior housing building without contract labor, and contract labor is typically 50% more than non-contract labor. So the cost side is a challenge.
Very good. John, tell us about your webinar tomorrow. John, I'm always impressed by the guests. Why don't you start off with that? Who are your people that you have as
Sure. This is our 3rd webinar we've done since the banking crisis, and this will be the best one, I think, or one of the best ones. We have a legend in commercial real estate servicing, Tim Mazzetti, who has been done special servicing of CMBS loans pretty much since they started. We have Brad Salzer, who is a terrific guy, a great panelist, very colorful. He's a distressed debt buyer. He'll be the most bearish person on the panel, undoubtedly. And then we have Chris Leff, he's head of commercial real estate for a mid-sized publicly traded bank. They're about 20 billion in assets, HTLF, and he's making office loans today. So you're going to get a mixture of opinions on commercial real estate.
And the price for this webinar?
Free.
There you
All
go.
I would ask is, you attend, and if you ever think of selling some loans, think of us.
There you go. There you go. We'll also live stream this on YouTube, and it'll be up there for you to view at your leisure. John, it's John Riasti. It's been a while. Tell me what's going on.
A lot of things are going on, including a lot of talk about commercial real estate. And I had a chance to listen to some of the conversation that you and John and Lance were having before we started. And I have to say, I totally agree with John. I think while there's a lot of portentous and ominous statements being made, around the just around the marketplace, there's not a lot of evidence yet to back any of that up. And I was just, the one thing that stuck in my mind was Eagle Bank here in Washington, D.C. just put out they put out from time to time press releases when they make a big loan. They just made a major CRE loan. I think I was trying to look this up before we started. I didn't want to have my head down on the computer, but I'm pretty sure that the figure was $45 million.
Wow.
So just like the panelist that's going to be on the webcast tomorrow, other banks are also making CRE loans, and that's what I look at. What are the banks doing? Especially, what are the banks that really focus on CRE doing?
Yeah, I mean, the data is because of the COVID stimulus, delinquencies, the extent that they do increase, which people expect to increase, it's going to lag a lot more than ordinarily would. And so you're not going to, you'll start to see it in the bank's numbers, I think, in the latter part of this year, but it's going to be a kind of slow increase. But, if you listen to people in the sector, Wells Fargo is the nation's largest commercial real estate sector, and they're expecting, significant losses in commercial real estate. So I do think the people in the know, while they're not doom and gloom necessarily, do expect to see significant credit deterioration.
Yeah.
John, are those losses by Wells Fargo, are those a indication of the economy overall, or a unique problem with Wells Fargo's credit box?
I know. I think it's just interest rates, right? So, we highlighted in our last webinar this project in Houston, led by a YouTube syndicator group, and they lost control of 4 apartment buildings. I think it was a $350 million loan, and it was fairly large credit. And basically, they bought apartment buildings, at a pretty low cap rate, financed it with floating rate debt. And when that debt went from 3.5% to 8%, they couldn't service it.
Yeah.
And it turns out, as you dig into the story more, these sponsors were terrible operators. So, having said that, if you bought a building in the last couple of years in a competitive environment, you're not going to be able to service your debt at 8% interest rates unless you've dramatically improved the NOI, which is difficult to do. So, yeah, I think it's an interest rate problem, but there's general economic stress. There was an article in Financial Times last week, and a pretty big increase in bankruptcies. So you are seeing the credit distress that maybe we should have seen in 2020 starting to come forward now.
Lance, how does this all translate to SBA?
Well, small business lending is a mirror image of what John just said. There are many small businesses, say somebody that got a loan in December of 2021, and that loan was probably at 6%. And now that same loan is at 10.25%. Small businesses are seeing stress in making their loan payments as a result of interest rate increases. not any huge change in the marketplace they're operating in. We are seeing an uptick in the number of small business loans that are having problems, but it's mostly related to interest rate. If the Fed would decide to cut the rate 2 or 3 points, a lot of these people that are having problems probably would be okay. So
John Riosti, you cover the gamut. So where does this rank in terms of all lending niches? I mean, we're concerned about commercial real estate, but how does it relate to restaurants and hospitality and service, et cetera, et cetera? How would you, in terms of context, where would you rate this issue?
Well, it's a huge one, because it's the biggest, usually the biggest or second biggest category of investment at all banks. And it's different. There's owner occupied CRE, and then there's CRE that's made for investment. But one thing I'd like to say about the banks, this will be very interesting if John is right and there is a significant increase in problem loans over the next year or so. It'll be very interesting to see how it plays out at the banks, because this will be the first real test, I think, of the new accounting rules, the new CECL rules. Yeah. You had the 2020, you had COVID, but there was so much money that got pumped into the economy that, I would imagine credit quality actually got better during the COVID period. Well, that money is beginning to dissipate. There's no more government stimulus on the horizon. The good thing for banks, if there is a silver lining to any of this, is for the last few quarters, even though that they've seen trouble on the horizon, they haven't had the problem. There's been that lag that John mentioned. They haven't had the problem loans pop up to any significant degree yet, but they've still been able to increase their reserves, to maintain their reserves at high levels. I think if you compared the level of reserves generally today to what they were, say, in 2007, it's night and day. And that was the whole reason that we have CECL, is because banks weren't able to prepare adequately 15 years ago. And they are today. At least they should be better prepared today.
I think they're well prepared from the capital side. I don't think they're well prepared from the manpower side. I think that the workout teams at banks are fairly thin. And if you do have the type of increases that we're expecting, they'll need to hire new people, sell assets, or move people over to workout.
Right.
Your comment about, just to add a little bit to your comment on stimulus, we recently underwrote a big restaurant portfolio, and you had some Burger Kings, you had some dark Burger Kings, and then you also had another major franchise. I'll just say Denny's, just as an example. And I looked at the borrower's balance sheet, and there was $10 million. I said, "What's all this cash?" And I look on the equity side, and I see Restaurant Revitalization Fund grant of $10 million. So you take that borrower got stimulus money, that borrower made it. This other borrower had these Burger Kings that were struggling. He ended up closing them all. So you could see how much the stimulus created winners and losers. And I'm not so sure that was very fair how that was done.
John Riosti, give me a definition. What are you talking about? What's CECL 101? I'm sure there's someone who doesn't know what you're talking about.
Well, it was a significant, even more than significant, huge change in the way banks are able to account for credit losses. Prior to CECL, they had to, they basically had to look backwards and say, our loss experience is this up to this time. So, we have to do our provision or calculate our provision based on what has happened. Now they can look forward. That's probably the simplest way to do it. And say that even though up till now our problem loans are quite moderate, maybe even historically low, we're still going to add X amount to our provision because we're looking forward and we don't like what we see.
Yeah.
Yeah, I mean, short answer, CECL gives banks a lot more reserves.
Yes.
Yeah,
So the
absolutely.
reserve levels are just higher, and CECL's a cause of that.
Well, and I think banks are
Go ahead, Lance.
banks are better prepared for any pending bad loans. They're in a better position. CECL certainly, I was at a bank that we were going through that process. CECL certainly has prepared banks better than, for instance, Bob, we go back to the Great Recession. They were not ready. Banks were not ready for that. This time around, if we have some chinks in the armor of commercial real estate lending and small business lending, I think banks are in good shape and ready for some problems in the portfolio.
John Riosti, what else are you working on?
I am, I've been following. I guess it was about 2 weeks ago, a fairly significant piece about SBA and the new rules. But I wanted to do a deeper one because it just occurred to me, after that, back in November, I guess it was November of 2020. My God, 2000. I hope it wasn't 2021. I think it's 2022. When these rules were out, they were announced. They were announced by the vice president
Right.
at a very high-profile event in Washington, D.C., the Freedmen's Forum. Very high-profile event. One would have expected or thought that given that kind of rollout, it would be a much more coordinated and I don't know the right term, but a much smoother rollout on the agency side. There'll always be opposition. They can't control what's outside of the agency, but it hasn't gone well outside the agency. It hasn't gone well inside the agency, and it struck me that given the publicity that was there at the start, it's an unusual result, an unexpected result.
Interesting. Has the problems between Congress and SBA, are they being resolved? We talked about that four-corner letter under the radar. I mean, is it anything happening on that?
So far, I don't think they're moving close to resolution. I think there's a lot of distance between certainly between the Republican side, even the Democratic side,
right?
And if you go back to that hearing where Nagel and Tony Wilkinson started, I mean, he used some pretty strong terms. I mean, I implore you to roll back, to intervene, to do something. So it's an unexpected result, just to put it that way, for me.
Do you anticipate changes between now and August 1st?
I don't know the timeline. It's very tough. I anticipate, and there may not be any changes because it's hard for things to get done in Congress. And I don't know why, and I'm not casting aspersions on any people, but it's just the system is hard, and they might not even with a tremendous amount of intent on one side and even some support on the other side, but some bipartisan support, they might not do anything. So this might just go forward the way it is because of the realities of legislation.
Until they vote to authorize SBA's budget. Very good. Hey, gentlemen, that was great. John's webinar tomorrow is at 1:00. There's the information. You can shoot an email to him or Joseph, and they'd be happy to sign you up. And thank you, everybody, for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.